Where did the money go in Q2 of 2024? In this video, we'll give you a breakdown of which asset classes were popular across the Australian ETF industry and our top 3 funds in terms of flows. When we're referring to flows, we're talking about the net investment made into ETFs. Global equity markets had a strong run in the first half of 2024, supported by falling inflation and the start of a global interest rate easing cycle by several major central banks. This environment has supported continued flows into broad-based US and Australian equities. Japan, Europe and India also posted strong equity index level gains for the first half of the year. Risks to global equities for the rest of the year include market concentration and valuations, now at historic levels for the S&P 500, as well as rising political uncertainty. With over half the world's population voting in major elections this year, we can expect heightened equity volatility around election outcomes. Within the Australian ETF industry, assets under management passed a record $200 billion after recording robust growth for the quarter. International and Australian equities dominated, making up 80% of industry flows. June in particular amounted to an impressive month. Here are the funds that got the largest flows from our own product suite. Number 1. Betashares Australia 200 ETF, ASX code A200. Although the ASX 200 remains relatively flat year to date, general resilience in economic growth across developed countries has supported flows into pro-cyclical economies like Australia. The local stock market was propped up by the strong performance of financials in the first half of the year, offsetting losses in the materials and energy sectors. A200 had inflows for the quarter of $539 million. Number 2, Betashares Nasdaq 100 ETF, ASX code NDQ. The Nasdaq 100 index continues to make record highs this year, led by some of the biggest innovators in the world, including the likes of Nvidia, Meta, and Amazon. Whether these tech giants are designing semiconductor chips or using them to build AI models, incredible earnings growth has supported share prices. NDQ had flows of $229 million for the quarter. Number 3, Betashares Australian High Interest Cash ETF, ASX code AAA. Although several economies have already cut interest rates, Australia remains an outlier. The market is pricing in a higher probability of an interest rate hike after reporting stronger than expected inflation numbers for the year to May 2024. With attractive return and low risk, AAA has a current interest rate of 4.45% net of fees, against the RBA cash rate of 4.35%. The fund saw net inflows of $97 million this quarter. Other standout funds from our product suite include our global equities exposure, BGBL, and our corporate bond exposure, CRED, bringing in $93 million and $66 million respectively. For more market insights and updates, subscribe to the channel. Thanks for watching, and we'll see you next quarter.